going to keep going? What's Putin going to do? What's this recession? Are we going to have another COVID surge? All this stuff goes through these folks' minds, and some end up making bad decisions.
Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Anchored in family values, Wayne offers practical advice to help you get the most out of your retirement years. For more information, visit today'sretirees.com. Now, here's your host.
Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We trust that you are doing well with the circumstances as we record this program, Wayne. Europe
Missiles are flying.
Is in a turmoil.
Yeah, for sure.
I can't believe, on a personal note, that has nothing to do with the show. Well, I guess it kind of does. I can't believe that this is even happening.
Mm-hmm.
This is... and we didn't discuss this. I just thought, wow, this is nuts, isn't it?
Yeah, and it's affecting us over here, too.
Well, when this started, and this is kind of what we're going to be talking about today, when this invasion of Ukraine started, of course, what's the old adage? Stock market, they don't like any kind of anxiety.
At least initially this time, right?
So, things kind of got bad real quick.
Mm-hmm.
And we're going to talk a little bit about that today. How does that affect us, affect you, affect me? How does it affect our resources, our investments, our retirement plan? You deal with retirement folks all the time. Mm-hmm. That's why we call it today's Retirees. Mm-hmm. And you're trying to encourage folks and trying to help folks. But I'm sure there is, in the retirement community, for some folks anyway, there is anxiety.
Yeah, especially for retirees. But most are done working. Mm-hmm. So all they have is all they have. They're not going to be adding any more money to their retirement plans or their investments or their savings because they're done working.
Sure.
No more employer matches, no 401k contributions. So when things like this happen and it affects the markets, providing they have money in the markets, right? Not everyone takes risk with their money. But those that do, when this happens, sometimes it's an eye-opener for them.
Sure. So how do, to get kind of started on our thought process here, and I think I know what you're going to tell me, but how do you prepare to weather these storms? Because it's not just the Russians and Putin. Every time you turn around, there's something that scares the stock market, and it's like a roller coaster.
Yeah, that's what it does.
Right.
People seem to forget that. Especially the last few years have been nice. Market's up. So everyone thinks that's all the market does, and this is great. It's easy to make money. The market just keeps going up.
Right.
Why haven't I done this before, or why don't I have more in the market? And then we have a pullback like we've had, in the last month or two. And then people start to wake up. Mm-hmm. And they start getting nervous. And, some start to second guess themselves.
Sure.
Those that have been informed, or just my clients, for instance, I make sure through the early stages of the meetings we have that folks understand that if they have money in the market, they're going to lose money. Mm-hmm. It's gonna happen. At some point, their account will be going backwards, and sometimes it goes backwards fast.
Right.
Depending on the risks they take. So when folks invest, part of the decision-making process of how to invest and where to invest is how much they could lose without changing course in the middle of a downturn. And that's the key, is dialing in to one's ability to see their money going backwards and not let it affect them or make them have them make hasty decisions that they shouldn't be making.
Sure.
So that's one of the points of the show is, I like folks to ask themselves, at least today's show is, how did they or how are they handling the market volatility? Everyone handles it differently.
Well, I can see, as you help folks put a plan together. And so we're sitting there, and for the last, let's just say 15, 20 years, in my memory, the stock market, I mean, it's got a little bumps in it, but it's mostly been going up.
Yeah, I mean, except for '08.
Well, yeah, 12 years ago, 10 years ago, yeah.
Yeah, March of 2020.
Mm-hmm.
COVID year 2020, I mean.
Oh, yeah, that was.
But it rebounded, kind of unprecedented rebound, very quick. And some people got out. End of March, early April, they couldn't take it anymore. COVID, no one knew where it was going. Things were shutting down, quarantine.
Right.
And because of the government stimulus and injection of money into the economy, loans, forgivable loans, low interest loans, stimulus checks, unemployment to everyone that worked 2 months for the previous year or whatever it was. Everyone was getting unemployment checks. And
Right.
So, which the government will pay for at some point, of course. We as a country will pay for that, money where the country went in debt. But that did help the economy and the markets to rebound fairly quickly. It doesn't always rebound that fast.
Sure. Right.
Warren Buffett says if you can't hold a security for 10 years, you shouldn't own it for 10 minutes. Because he knows sometimes, the markets take that long to recover from a big pullback or correction.
Sure. Right. Well, I guess where my brain was at is, the old Mike Tyson saying is everybody has a plan till you get punched in the face. And
of course,
when they're sitting with you and they're saying, oh, yeah, I can take this, and then all of a sudden the market drops X number of percentage points, the phone rings in Wayne's office and says, what are you doing?
Yeah, it really doesn't. I think I had one call,
Okay.
Just this past 6 weeks regarding someone uneasy about what they should do. Should they get out? What's Putin going to do? Is this going to be World War III? And so, and I have a lot of clients. So my clients know, I write my newsletters, I write my investment letters. So I, keep reminding them the market, they will feel pain. So whenever the markets are high, right, then that's the time to make changes if they feel their risk tolerance isn't what it was a year ago or 5 years ago. You don't want to make changes in the middle of a downturn.
Sure.
Right? It's too late. You should have done it before. So that's one thing I just want to remind people that if they did get uneasy during this last month or two, then once the market rebounds, they may need to make some changes.
Sure. And not having those calls, to me, is a good indicator that you are helping your clients with their financial plan in a way that they feel stable and they feel that they can weather anything that comes up.
Yeah, I mean, I don't want to get a bunch of calls and people upset or mad when the market pulls back, which is a normal thing for the market. I mean, It's what it does.
Right.
And people should sit on cash too. So when that buying opportunity comes, if they wanted to get more money in the market, they should have cash waiting there for the next opportunity.
Yeah.
I mean, it's just, it's just normal investing. Wars. We've been through a lot of wars.
Right.
Right. I mean, the market's still way up from the last 50 years, and there's a lot of wars in between. So and a lot of other uncertainties. So yeah, it's what the market does. But we'll talk a little bit about could it maybe get worse, and when we're done with the break, I guess.
We're going to take a quick break. When we come back, we will be talking more about uncertainty and how that plays into your financial plan. Go to Wayne's website at todaysretirees.com, todaysretirees.com, and we'll be back right after this.
We've all heard the word rollover when referring to an investment account at work or your 401k, your 403b, your 457 plan. What do you do with that when you've left your job and your 401k or other retirement plan is still at your old employer? Or what if you've retired? One thing you don't want to do is you don't want to leave your money, your retirement account, in your employer's 401k. Quite frankly, your old employer or current employer is the boss of your retirement account. So if you have questions about what to do with your rollover, you roll it to Wayne. Get it in your own hands where you have the whole universe of investments and choices, not just what your employer tells you you can pick from. So contact my office for a free consultation on how to roll over your old retirement account.
And welcome back to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. You know, today we're talking a little bit about the uncertainties in the world, and I know that everyone, or most everyone, has on their mind, you know, the financial markets, the war that's raging in the Ukraine. Not just Ukraine, you know, you hear about, you know, the saber rattling with China and Taiwan and Iran and Israel. I mean, it's almost global, isn't it?
Yeah, and it's scary. I mean, how could you not be concerned about it as
Sure.
as a citizen if you have a family or you enjoy your life, you know,
Sure.
wondering how are things going to turn out, right? But like we said in the segment before, you know, there have been similar things in the past. You know, even the Cuban Missile Crisis and things, you know, worse than what's happening now.
Sure.
But then you talk, you know, Putin's talking about, you know, cutting gas supplies off to his surrounding countries, you know, that are on his border, and that could really start affecting things.
You have that in our own country. You know, gasoline is $4 a gallon or more. You know, the
Inflation, just numbers came in today, the day we're recording this, that real inflation is like 6.5%, 6.6%, which is the highest in 40 years.
Sure.
You know, the latest report. We're hoping that's temporary. I mean, there's still a lot of experts that think it's temporary once the supply chain opens up and things get back to halfway normal. But, you know, I think in a few shows before we talked about this also being an off-presidential election year. And, you know, history shows in off-presidential election years when the markets were down in January for that year, which it was this year, that we should expect some turmoil. I mean, it's World War II. There's been like 30 similar situations, so we should expect that.
Sure.
But, you know, the average gain during those 30 years, though, by the end of the year was like 4%. So we had a lot of volatility. We had a market correction in the middle, a health restoring correction. Right? Corrections aren't always that bad. I mean, it's healthful to the market. But the markets have wound up. So I don't know how many of those 30 years where that happened, there was war going on like this. So there's always the exceptions to the rule. But, you know, you should expect a lot of volatility this year, which we've seen already.
Okay. And in order to have peace of mind as you go through that volatility, the recession, maybe not recession, the inflation, that's the word I was looking for. Having that peace of mind, that peace that I can sleep at night and don't have to worry about my financial situation, that's critical to a person and their
it's
family.
critical. And then if they're not sleeping well because of the markets, then something's wrong. You know, then they shouldn't have taken the risk that they've taken. You know, if we always talk about safe risk money, you know, if they don't have enough safe and they see a big pile of their risk money feeling the pain, that's harder to take than knowing, say, half of your money if it's in safe accounts. You know, we're not talking, you know, savings. We're talking, you know, a 3 to 5% rate of return account where you don't lose money, something like that. When that percentage of their money isn't going anywhere, isn't going backwards, they could sleep a little better knowing it's only the other portion of their investable monies that are feeling the pain. You know, then the next step is with the part they are investing in the markets, how risky were they? Did they have a handful of individual stocks, you know, which can take the worst beating? You know, are they mostly stocks, no bonds? Do they have a moderate portfolio? Do they have a conservative portfolio?
Okay.
So, you know, the amount of pain they felt during this recent pullback, you know, depends on how much risk they took.
Now, when we're talking about, you know, the inflation and how much risk we're taking and, you know, all these, you know, it's like fingers in a glove and you're trying to fit all of all of these things in there. I guess, and then you throw in the interest rate hikes that the Fed is saying we're going to do this over the next year. There's
aggressive hikes.
They're talking 6 or 7 over the next several months. Is that going to cause this person, when I say this person, this investor, more angst? Because that's all going to change everything as well, isn't it?
Well, it depends. It could change things for the better. All those people that were complaining about no interest on their checking or savings or money market or CDs are all of a sudden going to get their wish. They're going to start earning more interest on those accounts.
Okay, so that will translate down the, it'll follow at some point, you're thinking.
It should, yeah. Those rates should trail at some point. We've already seen them start to. So, I've compared in this show in the past, if someone has $500,000 in a safe account and, the Fed raises rates, and let's just say they start getting 2% more on their interest, well, that's an extra $10,000 in interest.
Sure.
So if they're living on a budget of $50,000 a year, say a couple, just modest lifestyle, and we have inflation of 6%, like we do now, well, now the $50,000 turns into what? $53,000 to live on. Extra $3 a year. But they're making an extra $10 a year on their investment that went up 2% interest. So, but if you don't have any money saved, right? If you're not a retiree or a young folk or young family that doesn't have that kind of money saved, they're the ones that are going to feel the pain. The most.
Right. So getting that plan together and helping you to get a plan together that makes you comfortable is critical to making this plan work from pre-retirement through end of life, so to speak.
Yeah, I mean, if you're doing your job right as working with a good financial planner and things happen like this, it shouldn't matter a thing with your worry or sleep or anything, just regarding your monies. The war is a different story, and the chance of nukes flying a different story, but regarding the whole money and the way it's invested and your income plan and all that, things like this shouldn't affect your worry. Everything should be in the proper place, risk tolerance wise, safe risk wise. So you just kind of cruise through this like it's nothing.
So if a person watching the program today or listening to the program, if they're feeling anxious because they're whatever, would this be a good time to call you and come in and sit down and you look at what they've done and what they're doing?
Yes, and I think right after the break here, we'll get more into detail on that, because that's kind of what I want to talk about, and it's gonna take a few minutes to go over that. But you're exactly right.
Okay.
They need to start thinking now.
So when we come back, you stay with us. When we come back, we'll talk to you who maybe have some anxiety. Things are going crazy and the war and all of this, and we want to help you work your way through that. Now, you can go to Wayne's website at todaysretirees.com, or you can pick up the phone and make an appointment at 866-626-3990. We'll be back right after this.
I'm Wayne Maslyk. I'm a certified financial planner and registered investment advisor, president of Great Lakes Benefits and Wealth Management. We do financial planning, retirement planning, and estate planning, but we also prepare your taxes. For $90, you get a CPA prepared tax return. Even if you have rentals or a small business, you're an independent contractor of some sort, and your financial advisor communicates with your CPA, you'll wind up paying less taxes over time. There won't be any mistakes because everyone's kept in the loop. But you have to be over the age of 62. You have to have a net worth of $250,000. See, that's my ideal client. So a good way to meet you is to get started by doing your taxes at a very discounted rate. Give the office a call, 419-626-3900, or our Lorain County office, 440-934-3141. Check us out on the web, todaysretirees.com. Just get a hold of us, set your time. We'll take care of your taxes this year for $90. A certified financial planner is a true professional, a well-rounded, holistic planner that helps you in all areas of your financial life. Estate planning, tax planning, financial planning, insurance planning. We have to sit for a 10-hour, 2-day exam, at least back when I took the test. It's not just a weekend designation where you go somewhere for a couple days, pay a couple $100, and now you have letters behind your name. One thing I think is important is that you try and find an independent certified financial planner. Somebody that doesn't work for a big firm. I myself own my company, Great Lakes Benefits and Wealth Management. The buck stops with me, an independent, certified financial planner, one of the only ones on the north coast of Ohio.
And welcome back to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. This program, we've been talking a little bit about anxiety and what's happening in the world, the war in Ukraine and other
your investments
parts. Are you having trouble sleeping at night? Well, when we left, Wayne, we were talking to the folks, and we were saying that when we come back, if they are having anxiety and they are really concerned about whether they're doing this right, now would be a good time for them to pick up the phone, dial that toll-free number, 866-626-3990, and come in and have a consultation and let you help them help themselves. Is that a good way to put that?
Yeah, I mean, it's a red flag if they are having the anxiety through this little market blip. It wasn't even a big blip. I mean, 12-13%, downward spike. That's not a lot. 40's a lot.
Yeah.
Right? 30's a lot.
Right.
But you never know how far it's going to go. Right? In the middle of a downward, people they think through their heads, well, is it going to keep going? Is it going to keep going? What's Putin going to do? What's this recession? Are we going to have another COVID surge? All this stuff goes through these folks' minds, and some end up making bad decisions. Like when it is down 13-14%, they get out.
And
right?
They just lost 13 or 14%.
Yeah, temporarily or maybe permanently, because those people that did that say, yeah, we're going to go to cash for a little bit, right? Or if they switch to bonds or whatever. That, I think, I figured sometime in February it started to go the other way, and then it turned back quick. So the S&P, say in January, was like 4,700, maybe 4,800 it reached. All-time highs, right?
Right.
I mean, ever all-time highs. And then in a 6-week period, it dropped to as low as 4,200. I think it even got into 41s. Whatever a 13-14% from 48 down is, that's where it got. So I think around 42. And those folks that got out then, that panicked, here we are, end of March, beginning of April, and the S&P's already into the 45s, 4,600. It's only 100 or 2 from where it was from highs.
Sure.
And if those people got out, 6 weeks ago, they just missed that whole swing up.
Right.
And now, how are they going to get it back? If they go back in now, they're going back in high.
Sure.
So that's why you can't do that. Whatever money you do have in the market, the old, stay the course, stay, you got to hang in there. That's an old broker saying for
Right.
forever. Now, granted, it's hard to do when all your money's in the market and you're taking a lot of risk with it.
Sure.
It's hard to hang in there when your money's going down fast. So that's why people shouldn't do that. You got to have safe money. And then what you are in the market with shouldn't be that aggressive to where you're going down that fast.
Right.
I think the market was down 13-14%. I think my moderate portfolio was maybe down 8%, something like that.
Okay.
So much less risk than the market. You're still going to feel some pain, but not as much as if you were, say, all stocks or aggressive.
Right. And that's crucial from what I'm understanding. If a person, like you're saying, if they're feeling this anxiety, if they're really concerned and they're saying, wait a minute,
Something's wrong.
I can't stomach this maybe even because of their age difference. I can't stomach this like I used to.
Right. Yeah.
Or, as they get older, they don't have enough time to recover.
Right?
I
mean, if someone has a change of philosophy or change of objective or change of goal or change of heart, they're just thinking about it differently, about their money and the risk they're taking, and maybe they worry about it more than they have in the past, then it's time to make some changes, but not when the market's down. You got to wait till it comes back like it is now. Like now, you got most of your losses back. Now would be a good time to start thinking about toning down your risk or getting more money safe.
Sure.
But not in the middle of the downturn.
Right. But right now would be a great time for them to, make that appointment.
Oh, of course.
Come in and sit down with you. And,
it's always a good time.
And your team. Well, I mean, this is, what we've been saying for several years as we've been doing this program is you help families put together plans for their family that makes sense for their family.
So when things like this happen, there's no worries.
Right.
Because it's, we took the due diligence to make sure that we put our clients in things that are appropriate for them based on the loss they can take mentally.
Sure.
Not financially, mentally. Financially, most people can take a loss and it's not going to affect their lifestyle at all. But the way they think, their worry, that's what we focus on.
Sure.
What can they handle as a person, as a couple if they're married, as a household. And then that's how we arrange their holdings.
Sure. And that's, friends, why Wayne has put this program together so that he can help you. He can help your family put together a plan, a financial plan that makes sense for you. Your financial plan is going to look a whole lot different than mine. It's going to look probably a lot different than your neighbor's.
If I could inject something too, like a financial plan, it's a lot in one. It's your investment portfolio, it's an income plan, it's a retirement plan, it's an estate plan, it's a tax planning or tax savings plan. I mean, that's all part of it. It's not just where you invest your money.
Sure.
That's a piece of the puzzle, but it's an important piece.
Right. And that's what Wayne does. He helps you put together a plan that makes sense for you and your family. And again, like he said, it's not just, putting some money in the stock market or bonds or whatever. It's a plan that makes sense for you. So you pick up that phone and make that appointment and go see Wayne at 866-626-3990, or you go to his website. A lot of information there. You can rewatch these shows if you would like to, going to his YouTube channel through his website at todaysretirees.com, todaysretirees.com. We'll see you the next time.
Thanks for tuning in to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Visit todaysretirees.com or call 866-626-3990 to schedule a no-cost appointment with Wayne. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management, family-focused retirement and tax planning services, anchored in family values. Information and opinions discussed on Today's Retirees do not necessarily reflect the opinions of this station. Opinions expressed should not be substituted for individualized consultation with a qualified financial advisor. For specific information, call 866-626-3990 or visit todaysretirees.com.